Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on the March 2026 inflation report. From disinflation to pressure, energy costs push prices higher. The National Bureau of Statistics has released the March 2026 Consumer Price Index report, which signals a shift in Nigeria's inflation trajectory. After a period of gradual moderation, headline inflation rose to 15.38% year-on-year in March 2026. Up from 15.06% in February. More importantly, month-on-month inflation accelerated sharply to 4.18%, up from 2.01% in February, indicating a significant resurgence in price pressures within a single month. This development suggests that although inflation remains below last year's levels, the pace of price increases has picked up again, pointing to a potential pause or even reversal in the disinflation trend observed earlier in the year. Food inflation, which remains the dominant driver of headline inflation, rose to 14.31% year-on-year in March from 12.12% in February, confirming renewed upward pressure of food prices. On a month-on-month basis, food inflation eased slightly to 4.17% from 4.69%, but remains elevated, indicating that food prices are still rising at a fast pace. This pattern suggests that although the rate of increase in food prices slowed marginally, the overall level of food prices continues to rise significantly. The increases were driven by staples such as yam, cassava, potatoes, ginger, and granules, highlighting persistent supply chain constraints, logistics challenges, and the impact of higher transport costs. Core inflation also showed a worrying trend. On a year-on-year basis, it rose to 16.21% from 15.88% in February, reversing the earlier decline. More notably, month-on-month core inflation surged to 4.03% from 0.89%, indicating that inflationary pressures are no longer confined to food but are spreading across the broader economy. This is a key signal, as rising core inflation typically reflects structural pressures, including exchange rate pass-through and higher service costs, all of which are harder to reserve quickly. Looking at the drivers of inflation, food and non-alcoholic beverages remain the largest contributors at 5.5%, followed by restaurants and accommodation services at 3.26%, transport at 1.80%, and health at 1.27%. On a month-on-month basis, food contributed 1.98%, restaurants and accommodation 0.95%, transport 0.43%, and housing and utilities 0.35%, indicating that inflationary pressure is becoming more widespread across essential foods and services. A notable shift in March was the stronger inflationary pressure in rural areas. Rural inflation rose to 17.22% year-on-year and 6.73% month-on-month, significantly higher than urban inflation at 14.64% year-on-year and 3.16% month-on-month. This suggests that rising food costs, weak distribution networks, and higher transport costs are hitting rural consumers harder, reversing the earlier trend in which urban inflation dominated. Further insights from the sub-indices shows a broad-based pickup in inflation drivers. Energy inflation rose sharply on a month-on-month basis to 6.6% from 0.2% in February, while goods inflation increased to 5.5% from 2.8%, and services inflation turned positive at 2.6% from minus 0.3%. Imported food inflation also rose to 1.1%, indicating some pass-through from external factors. These movements confirmed that inflation in March was not just food-driven, but also influenced by rising energy costs and broader cost pressures across the economy. At the state level, inflation remains highly uneven. Bayelsa, Sokoto, and Bauchi recorded the highest year-on-year inflation rates, while Osun, Kano, and Kaduna recorded the lowest. Overall, the March inflation suggests that Nigeria's disinflation process is under renewed pressure. Part of this reflects the impact of the ongoing war and global tensions, which pushed Brent crude from about $61 per barrel at the start of the year to $118 per barrel at the end of March. Petrol wholesale prices in Nigeria reportedly rose by about 61% in March, reaching about 1,400 naira per litre in Lagos and Abuja. This increase in energy costs is feeding into transport, logistics, and production expenses, with knock-on effects on the prices of goods and services. As a result, inflation may remain elevated in the near term, and the path to sustained price stability could be slower than expected. Investment strategies to hedge against inflation. From an investment perspective, the March data reinforces the importance of discipline and diversification. With inflation pressures broadening, investors should avoid holding excess cash in low-yield accounts and instead prioritize instruments that preserve purchasing power. Treasury bills, Federal Government of Nigeria bonds, and other high-quality fixed-income instruments remain attractive, particularly given the current yields that provide a buffer against inflation and may decline as monetary conditions ease. Given the resurgence in inflation and the the rising global uncertainty, maintaining some level of foreign currency exposure remains prudent. While the naira has shown relative stability, recent pressures from higher energy prices and global tensions suggest that the currency's volatility may persist, making diversification important. In the equities market, the long-term outlook remains positive, but rising cost pressures may impact corporate margins in short term. Investors should therefore focus on resilient, fundamentally strong companies with pricing power, particularly in sectors such as banking, telecommunications, energy, cement, and essential consumer goods. This remains a market for disciplined investing, gradual accumulation of quality stocks rather than speculative positioning. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, or feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070824634747. Stay blessed and have a great week.